Sugar daddy and investment life bring you freedom of financial.
Today, I want to discuss an extremely urgent and significant piece of news Trump recently posted on Truth Social earlier today, explicitly stating that he might not meet with President Xi Jinping. He reiterated that he might not meet with him at all. Chinese President Xi Jinping was supposed to meet with him. Originally, they were planning to meet during the APEC summit in South Korea. As soon as this news came out, the market immediately became very volatile, didn't it? Look, the Nasdaq at one point dropped over 5%, and now in after-hours trading it is still down almost 5%. Although he just made a single comment on a social media platform, and it was not an official statement, investors are already feeling a kind of geopolitical pressure. As for the current situation, it is still unclear for now, because the Chinese side has not officially responded yet. But what we can be sure of is this. Does this news represent that Trump might want to use this as leverage to renegotiate something in the China-US relationship? If the negotiations break down, then both sides might start firing at each other. Trump is very likely to play the tariff card again. Although it might not be a repeat of the previous tit for tat where one side raises tariffs by 100% and the other responds with 90%, he could still impose tariff barriers on electronics, cars, mechanical parts, or even medical supplies. On the surface, these actions seem to protect the US, the manufacturing industry, but in reality, the goal is to win over voters in the southern states and the agricultural sector. As for Trump, he has always been clear that to win the midterm elections, the agricultural states are a key voting bloc. Doing this would directly drag down the global supply chain. Just look at Tesla, Apple, and even Boeing. Many of their parts are produced there. They're made in China. Even brands like Nike and Lululemon rely on Chinese textiles for their sportswear. If tariffs are raised to 50% or even 100%, the supply chain will definitely be thrown into chaos and inflation will surge rapidly. This is especially concerning since the US CPI hasn't been fully brought down yet. If prices rise again, then the Federal Reserve won't be able to cut interest rates, right? And the market, it'll be under tremendous pressure, won't it? And during this period, the US stock market has already hit a record high. In the US, the top 10% of wealthy people actually account for 50% of the country's consumption power, right? These people also hold a lot of stocks, so if the stock market pulls back, if their consumption shrinks, or if consumption decreases while inflation rises and the economy slows down, then it will turn into stagflation. This situation is the most dangerous because if you raise interest rates to curb inflation, it will hurt the economy. But if you cut rates, inflation could explode. Just like in the 1970s, the economy was pulled back and forth by high and low interest rates. At that time, the investment market might not just adjust for a few weeks. That means even just a 1 or 2 month correction could see drops of 10 to 30%. But short-term pain is inevitable, especially for highly leveraged investors. They'll really feel the impact. On the other hand, things aren't easy in China either. China relies heavily on the US for many industrial materials and chip technologies. Although right now they're working hard on processes below 10 nanometers, there's still quite a way to go. Even if they want to achieve mature processes below 10 nanometers, it will still take some time. If the US not only stops exports to China, but also pressures other countries to ban or prohibit transshipment of products to China, then China's AI, semiconductors, and even new energy vehicle industries could all be impacted. As for SMIC, although they have mature processes like 14 nanometer and 26 nanometer, ultimately, when it comes to the high-end side, for example, GPUs needed to train large language models, they still have to rely on the supply chains from the US and Taiwan. This could also cause Chinese capital to flow back domestically, pushing up the short-term performance of A shares and local sectors. But the global AI industry chain as a whole will get stuck. It will be blocked. However, I think that in the end, Trump probably won't actually start a fight. He knows very well that starting a trade war would directly affect his election prospects. For example, if China stops buying American soybeans, the agricultural states, which are key voting bases, would immediately come under pressure. And right now, China has only bought 20% of the soybeans. There's still 80% left to be purchased. The US has a huge stockpile, up to 2 billion tons. If they can't sell it, the price could even drop into the negatives. Negative prices, just like what happened back then with crude oil futures, when the prices turned negative because there was nowhere to store the oil. And now, with Christmas approaching, even though many factories have already bought their goods in advance, if tariffs are raised again next year, the prices of goods in 2026 could rise across the board. If that happens, inflation will rise again, the stock market will fall, and consumer confidence will drop, all of which would be extremely unfavorable for Trump's election prospects. So I think in the end, he'll chicken out, meaning he'll back down a bit to save face, like asking China to buy more soybeans, for example, delay the implementation of tariffs, or even reopen the framework for talks. Well, I think the worst case scenario would be if both sides lose their heads and clash head on, but the chances of that happening aren't high. What's more likely is that the market will enter a short-term correction period. Within 1 or 2 months, the drop could reach 10 to 30%, and then it would gradually climb back up. But in the long run, both China and the US are still in a bull market. We haven't reached a turning point for a long-term bear market yet. The relationship between China and the US will keep getting more tense because they are competitively interdependent. That is, they cooperate as well. They need to cooperate, but
please subscribe and follow New York Daddy Investment.